Here with me.
Subscription.
Guys, welcome back. Sorry about that. I hope you can hear me. Kindly confirm so that we just continue where we stopped. And maybe Dan, I don't know, you still have an argument on that. But as far as entertainment, meals, welfare of staff is concerned, as long as it's not individualistic, it automatically qualifies to be allowable for tax purposes. Okay. So we may continue. So we're saying you bring here the scheme. Now that is one way of removing the alliables. Now there's this other. Okay. This other says that you remove the entire item that has an adjustment, okay, by either adding it or lessing it. Of course, for an expense, you just add it back. That's how you remove it. And then you only now remove officially what is the right thing. Okay. How do I mean? You see, I removed it here and we are okay with it. I'm saying, what if I say, okay, because I'm not responding. What if I say, remove the entire expense, the sundry? It was 16,000. Okay. And then less the right sundry expense. Which is the 16,000 minus the wrong one, which was 1,400. Okay, so there's this option. I don't know which option you prefer. So there's this. The idea is that the net effect is the same. That someone who does this, okay, guys, please, if you are asking a question, you raise up your hand. I allow you to speak. Okay. The idea is when you get this plus this and deduct this, you get 33. It's as good as saying I just only remove, I only add back the 1,400. Okay. 1,400. Right. Now get this plus that. Okay. You see, you get the same answers. Okay, but you're supposed to make up your mind whether you're going to always remove the entire item that has an adjustment and then you only bring back what is the right thing, or you only look out for removing the wrong thing, remove the wrong thing only. I would mute, but where I am isn't favorable. But just no stuff. Christmas parties sell out, then the rest. Okay, rating Sandra Express. Even estimate. Okay. Okay, then maybe we shall get time and maybe you call me and we talk. Okay. And then agree. Whatever we agree upon, then we shall share it with the class. But for now, I can't take your argument just like that. Okay. So I hope we account that. Then back to this. So I was still asking you guys, are you okay with this? Which one do you prefer? You remove the entire item that has an adjustment, and then you bring it back. You only bring back the right thing. That is one of doing things. Or you decide that I'm just going to be removing the wrong thing. Remove the wrong thing, and that is it. So you tell me now, then we go with that. The first one. Which is the first one? Which one is the first one? The one of removing the wrong thing only.
Yes, the first one of removing the wrong thing.
Okay. Maybe how many guys agree with Dan? Do you agree that it is not subscription but rather Christmas party? How many agree with Dan on that? Dan is saying that subscription to buddies is actually allowable. What's not allowable is the Christmas party. If you agree with him, feel free to share. But with me, I don't agree with him. Okay. And but I'll get in touch with him. Then we see if he convinces me, then I'll share with you the information that we have agreed upon. But for now, let's take the one I know. Okay, which is this. That this is not allowable, and therefore we're removing it. Okay. You got the next item. Okay. Someone else agrees with him. Okay, shall I just get back to this? Since you two guys, I know I'm one, but I'm sure the guys will back me up on that. So let's go to note number 2, okay, which is repairs. They're saying repairs include 6 million for partition, the general office. Give us tangible reason. I should be the one to give you, or should be the ones to give me? I already gave you my reason. I told you that when you compare Christmas stuff, Christmas party, and subscription to buddies, we are saying, one, you don't know buddies. I don't think any of you knows what buddies is in full. Yeah, but I know what stuff Christmas party is. And I'm saying Christmas parties, just like entertainment. If you go and check your deductions under business income, you find you have meals, deductions, and something to do with welfare. And we're saying those costs are allowable. Okay, they're allowable expenses. All right. Then for subscription to buddies, I already told you that unless you know it, what it is in full, maybe you can tell me what is it in full, and then you justify your reason. And I'm saying, had they said subscription to maybe a trading union, yeah, or a regulator, yeah. Now, like I've already told you, I'll give you an example. That if MOBS subscribes to higher what, how do they call it, higher council of education, okay, that is, of course, if they don't subscribe, their business will be in issues. Okay, so it can only be allowable. But we're saying buddies, just like here the word, it must be friendly stuff, stuff like that. So it can't be for business purposes. That's what I'm saying. Okay. So let's go to something else, guys. Okay. Now repairs. Repairs, we're saying repairs will be fine, and if on a condition that they are not capital expenditure. Okay, now like here, they're saying the 6M was used for partition to general office. Okay. Now, I had an argument with friends on this, but for purposes of the discussion, I'll just take it like the way you guys know it. And we're saying partition is you have seen people rent a floor. Okay, someone comes on a flat and says, I want the entire floor. Now, the entire floor usually has space, just one door, or probably two doors. Now what they do is they come and bring in what you call partitions, or in form of glass. Okay, they try to put glass, partitions or divide the entire floor into rooms. Now, in that way, we are saying that is capital in nature. And the reason is because that you have maybe more offices, mainly more offices, but you don't have space. I don't think it's about space. Okay, you have more offices, you can accommodate 2 or 3 offices. So because of that, we are saying it is a capital expenditure. Now, if it's capital expenditure, it means that it's not allowable. Yeah. So if it's not allowable, and yet it's part of the expenses, if you come and check here, repairs and renewals, 7.8, we're saying part of that is not allowable. So we only remove the unallowable part, which is the 6K. Right? So I'll come and say repairs. 6,000. Pardon about repairs. Jackie, kindly pay attention. I think you're asking these questions either intentionally or something. We just said it just right now. And I've said that for repairs or any expense, as long as it is allowable, as long as not allowable, as long as it is capital in nature. A capital means that you're spending it on a non-current asset, or either to buy it or improve its capacity or useful life. Okay, you remember IAS 16, subsequent expenditure on non-current assets. If you're spending on a car, for example, and this expenditure on the car that you already have is improving its useful life and its way of operating, we are saying we capitalize that. So in capitalizing or in adding it on the cost of the asset, we are saying it's not part of the expenses. So even tax borrows the same idea, that if you're spending on non-current assets, like buying it or acquiring it or improving it, we are saying it can't be in the income statement. So it can't be an expense. So the same thing here, that this repair on a building, they put in partitions. Partitions, they're saying they're increasing its occupancy. Okay, that if you'd have one office in that room, you're now going to have 4 offices. And because of that, we're saying it is capital in nature. So being capital, we're saying it's not an expense for income purposes. Or yes, for profit or loss statement. So and therefore, it's not allowable. That's why I'm removing it from here. Okay, I hope I've answered you, Jackie, as far as that is concerned. Someone is saying, my opinion about Christmas party is disallowed because taxpayer cannot link it to any aspect of business promotion costs. It could otherwise be allowed if the tax. Okay, now, guys, there's some things that you don't argue with what? You don't argue with, how can I put it? With what you think or logically. Okay, some things are just the law. The law says this. The law says this. Okay, so I'm referring you to go and check your business notes. In fact, you go to your act. Clearly, they're saying that anything to do with entertainment. Now, entertainment, how would it really ever bring business to grow or promotion? Entertainment. You go in offices and you find there maybe they put soccer, for example. Entertainment. How would it impact an employee or the business? Okay, so some of these things you don't just think about them logically. Okay, it's either you read the act or you did not read the act. Okay, so it's the same thing I'm saying for Christmas. if you've read entertainment and meals and you're aware of those figures, then there's no way you can come and say it's disallowed. All right. So anyway, let's not touch about that. Allow us continue. Okay. But it was provided to all employees. That's all enough to provide business expenditure. Okay. So I beg you don't touch about it. Everybody has his own reason, but that is it. With the laws, you can't. It's like if you'd have those laws that promote immorality. You know that it's immoral, but someone says it is what? It's illegal. You can't do anything. There's something with tax here. Yeah, if they have said it's allowable, it's allowable. Yeah. You remember the one of transport, for example, if you go back to employment and employee income, there's that part of where we say that if somebody is spending money to go and work, why isn't it allowed for deductions? And clearly, if you really sit and feel it or see it, you're saying, I'm at my home, I have to walk or move to the workplace, I'm incurring transport. Why are they not allowing me to deduct this transport from my chargeable income so that I have a revised chargeable income? So we're saying that the law says you can't allow for that. The law is clear, says that any transport you incur from your home to the workplace is not allowable for tax purposes. So it's as clean as that. You can't do anything. You can't argue about it. Yeah. So let's move on. I think also recapitalize repairs could be incurred about 50%. About the 50-cent currency. I don't want to agree with you on that. There's a limit of capital expenditure. I know. If someone can remind me, I don't know where is that one 50%. Is it 50 currency? The one of capital expenditure. When do we begin saying that an expenditure is capital in nature? Okay, is it the 50 currency thing? Okay, I don't know really, Jimba, but thanks. I'll maybe get back to you on that. Okay, so we can continue as far as repair is concerned. We're done. Okay, so the next thing. The next thing is the saying legal and professional fees. You have legal debt collection. You have alteration to partner's deed. Then you have the past professional accountancy. So for these ones, they're all allowable expenses. They are legal fees that are allowable for business purposes. Okay, so we don't do anything. We just move on. Then traveling expenses of staff members and car expenses. I still think these ones don't have any adjustment. Okay, they're all allowable. When the expenditure is above 1M. Yes, Shakira. I also had that feeling of 1M. I don't know, it was just skipping. Okay, I think when an expenditure is above 1M, that's when we say it is capital in nature. Okay. So thanks. It's 50. Okay. So I was remembering the amount, not the currency. Yes, some of the question came. The question is in the group, example 3. Okay. It's in the groups, both groups, evening and day. So traveling, we are fine. Then we go to partners salary. Okay. I'm saying for business purposes, allow us to say these are normal salary expenses. So we don't have any adjustment on them. Then we have tax agreeable. Okay, capital allowance. So capital allowances, as long as tax allows for them, then they are allowable deductions. So the question is, was this figure included in the profit or loss or not? Okay, so we go back and check if it was there. If it is there, then we don't do anything because it was allowed. But if it's not there, then we have to adjust for it. Okay. So when you come to the profit or loss statement and you peruse through, you're going to find there what you call capital allowable expenses. Okay. Or capital allowance. So it's not there. So because it's not there, you come and do it officially under allowable. Okay. So come in, you say capital allowance. was 840. Okay, and then you get your chargeable income. Chargeable income, we're saying you get total allowable, then you get total. Okay, then accordingly, we're saying it is the net profit plus non-allowable minus allowable. So you have that. Okay, so allow me comment on, allow me bring in something else. Assuming we had wear and tear, because I even forgot to bring depreciation. Yeah. So if you come back to this side, you move line by line from top to bottom. Please talk about partner salary. Yeah, and I've said we are assuming this is a business number. So we're saying assuming the partner salary is a normal expense. I want us first to appreciate the business income, then we come to partnership with the same number. Okay. Right. So after dealing with your additional information, you now come and move line by line. Okay, line by line, trying to get the right thing. To see if there's any item probably that could be straight away non-allowable or exempt, and it's part of the profit. Okay, so when you move through, there's gross profit, then you have rent, you have sundry, all these are allowable. Yeah. Then you have staff salaries, you have bank interest on overdraft, that is finance cost, that is allowable. You have repairs, you have legal fees, stationery and telephones, you have traveling expenses, we saw. You have partner salaries. I've said you take these as staff salaries for now. Okay, then you have depreciation. Okay, now for depreciation, you and I know that this is accounting depreciation. We're supposed to remove it. Okay, so allow me create something small here for business purposes. Assuming we had maybe a note 7. Which tells us maybe you have write down. Brought forward. Okay, for the car, we had 30,000. And then for, what was it? Okay, the other item, I didn't see it. Let me check again. Equipment. Okay, equipment. Maybe 40,000. Okay, so for this one, we know we're supposed to do the wear and tear. And partnership, partner salaries are not allowed. Shakira, I don't know, they've just joined or something. Guys, I've said, I know it's a partnership question. You're saying we're using it for business purposes. And because we're doing business income tax, we're saying this partner salaries are normal tax salaries, normal staff salaries. I've just said it now. I know it's not allowed, but I'm saying it's not a partnership. It is now a business number. We're going to use it again for partnership. Okay, that shouldn't be confusing since you all have an idea on that. So back to this. So when you're given depreciation in the income statement, we're saying that depreciation is just for accounting purposes. They have their own tax rates and their own methods that they use. So for tax purposes, we're saying we know how to do our stuff. Okay. And one of those ways is you have to draw a wear and tear schedule and determine if there's any additions or disposals and stuff like that. Okay, so allow me not to put any additions and disposals. Let me just have this so that we just save time. Now, our wear and tear schedule. Our wear and tear schedule will always have the 3 classes. Okay, trying to determine now the actual depreciation that should be. Okay, so we're saying have details. You can say items. So you have class 1. Okay, so this is class 3. Class 1. Then you have class 2. You have class 3. Okay, so what you're supposed to bring is the wear and tear. Sorry, write down what is brought forward. So here we're given 30,000. Okay, then you're given 40. Then we have nothing for class 3. Okay, because you know that cars fall where? No. I think I've done it wrong. Okay, cars fall this side. Okay, then you have equipment. Okay, assuming it is agricultural equipment. Okay, so this is our wear and tear schedule. If you had any additions, of course, you would say we add additions or additions. Assuming you had bought maybe a car, you bought a computer, whatever you bought, we add them according to the classes. Talking about the classes, class 1 is all about technology related items. Okay, laptops, computers, routers, whatever is internet related, always end up under class 1. Class 2, we look at what we call agricultural equipments and mining equipments. Okay, things to do with land and agriculture. Okay, those items come under class 3, under class 2, sorry. Then class 3 are all these other items that don't fall within these two. Okay, if they don't fall within these two, they'll end up here, with an exception, of course, of a car being given to a CEO and stuff. You know that when you compute it differently. Okay, and the same thing with factory building. Okay, factory building, you compute them differently, but other items come here. Okay, cars, normal cars, whatever. Did I say cars the CEO? No, cars for CEO still they fall under class 3. Okay, that one has a condition that if the car weighs or was bought for more than 60 m, then we only bring the 60 m as the addition. All right. Pardon, class 1. Class 1, I've said that anything technology related, anything that has internet in it or technology, ICT, stuff like that, falls under class 1. So a true example is a computer, a laptop. Okay, I said also router in case you're a telecom company, they end up here because the internet related. Then out of the e-ceiling stuff, I've not understood that one, Karim. Okay, what I know about ceilings, for the motor vehicle, if it's given to a staff, they're saying that if the car is more than 60 m, assuming 70 m, what we bring here is just 60 m. Okay. The link is closing still. But what if the car is below? If the car is below 60 m, you just bring the figure of the car. If it is 50 m, you bring 50 m here. What if it exceeds? I mean, I've just talked about it. Why do you put the balance? The balance doesn't go anywhere. The balance doesn't go anywhere. You just bring only the 60 m. Okay. So we continue. So then you apply the rates. We know that for class 1, it is 40%. Guys, someone is not. Lydia, Jacqueline, guys. So we're saying for class 1 is 40%, for class 2 is 30%, then for class 3 it is 20%. Okay, those ones you have to know them, the rates, you have to know those. So at the end of the day, what you shall have is in case you have any additions and you have any disposals. Okay, for disposals, they reduce the figure. So you end up with what we call write down, carry down. Then the tax, therefore tax or the wear and tear. Wear and the wear and tear would be whatever you have here. Here is nothing, but here we have 40. You have 30. You multiply the rate times the amount. So in this case, I think it will be 12,000. And for this one to be 6,000. Okay, so now this will be officially our real depreciation. So what happens is you come to the workings. You come to your workings, you first come and remove this depreciation here of 600 plus 100, that would be 700. Okay, you remove it from the profit. How you do that is by adding back. Okay, so you come here under allowable and you say depreciation. So bring the 600 here. Okay, so let me first remove this. Okay, then the right figure is the wear and tear. You now bring it under allowable. What is allowed? Yeah. So we saw it was is 12,000 and the 6,000, giving us the 18,000. So I'll bring here 18,000. Okay. So that is how you deal with wear and tear in business. Okay. So let's continue. Then after depreciation, we have interest on capital. I'm saying just call it interest. Show me insert partnership. Then you have donation to a local youth club. Now, a donation to a local youth club, we know donations. They have 3 exemptions. That one is if you're donating to an amateur sports club, then we exempt that. We don't. Tax says, yeah, we can deduct that. We allow you to deduct that. If you donate to a religious institution, still URI says it's fine. Okay, that is all right. So you go under expenses and remove it. Okay. Then if you donate to any public related institution, okay, an institution that benefits the public, then we shall also do what? We should also allow.
We are doing students, give them 20%.
Guys, man, can you respect the class? So what was I even saying? I was saying 3 donations, yes. Then the other is there are only 3. So what disqualifies the youth club is, whereas the donation to someone would say that's the youth, yeah, but they're saying it's not benefiting the public. Okay, and therefore this donation does not allow or is not allowed for tax purposes. URA does not allow you to deduct it. So you come and add back this donation. How do you know? How do you compute for building separately? Okay, shall I see that? Erase it and remove nothing. If it is one, Esther, I've not understood what you're saying. Erase it and remain with nothing. Now, if it's buildings, and specifically factory buildings, factory, okay, what you use for production, it's dealt with separately. Okay, sweeper pause asking. Asking. What if carried down was less than 1M? The write down value was less than 1M. I think we'll still charge the depreciation. Okay, sounds like you're spending. Sounds like you have spent on the. How can I put it? Okay. I don't even know how to put it, but it sounds like you're saying that you have spent money on capital in this financial year. No, this work and their schedule shows you all the assets that you've been having since, then any new additions that you've made, then any deductions that you're making, the disposals. So the write down value is representative of the entire asset register that you have. So it's not the capital expenditure. It's not, you would still charge the rates accordingly, 30%, 20%, and 40%. Okay, so allow me continue. So ideally, you have dealt with the entire information, maybe removing that donation. So removing it, we less, since it's an expense, we add back. It's a donation. I don't know how much it was. Okay, so assuming it was 4K. So guys, that's how you get chargeable income under business. Okay, for business purposes. And then accordingly, you charge the rate, the tax rate, which you all know it's 30%. It's charged on the chargeable income. Okay, 30% of the chargeable income. That becomes your tax liability. So in case we had any provision, okay, remember we would have removed it, so you list the provision here. Provision tax. You bring it here and list it. In case this is 4K, for example, you're saying what you have as your tax liability left will be that minus this. All right. So I want us to now, I hope you have understood how we do business tax. Maybe I can talk about the factory building. Okay, we depreciate it separately. In case you have a factory building that has been existing, okay, for more than 1 year, or it may be last year, we shall charge the thing is supposed to be 5%. Okay, they say you say A times B, then times C. Okay, let me first stop here for now. The link is about to close, so you can join again with the same link so that I deal with the factory building and then we do the partnership. Okay, can you respond to your chats? Pardon on where down is given in class. We have said that if it is less than 1M, you still charge the depreciation. Pardon on the donation. Donation, I've said there are 3 classes that we exempt for tax purposes, as in not exempt, but URA allows you to deduct them from your gross profit to come up with a chargeable income.